Hello, this is Zach Meir with a monthly look at a couple of major markets. I'm starting off with the euro, one of the more controversial and I suppose more difficult than most markets to look at in terms of the pressures between the fundamental and the technical side. What you can see here on the daily chart is a what looks like a complex and extended head and shoulders formation. This has been in place since September. Normally, of course, according to charting rules, you'd be looking for a break of this 128 dollar level, $1.28 level, and then a fall to retest the $1.20 lows of last July before the ECB president promised to do whatever it takes to save the euro. We're still going to find out, or still waiting to find out whether that's going to happen or not. But in the meantime, we've got the situation where, although there's a strong signal here in terms of the charting formation, the break hasn't actually come. And the normal wisdom in such situations is that you really should wait for the break and not try and jump the gun, because obviously it could either be a bear trap or you ensure that you're selling at what is effectively the bottom of the range rather than doing anything clever. My sort of best advice in the near term would really be to wait for this trading zone that we're in between 128 and 130 to break sort of comprehensively either way, an end of day close or even an end of week close if you're fussy about it, and then take your positions. Even if you're late, that'll probably guarantee or make more sure anyway that you're not hit financially. It's also important to note that the 200-day moving average is at $1.3022, 23, and therefore this is a strong level, a strong feature. And really, if you're going to go long again, it would be wise to wait on that to break. But really, it's sort of 50-50 at the moment. We've got the RSI below neutral; it's at 41, and so therefore really above support, but with a near-term trend down. If I had to be pushed either way on this, making a call over the month, I'd actually go for the upside, really because the 200-day moving average is still moving higher, and also because support after since September has come in at or above previous resistance before that date. So that puts me on the long bias, even though I suppose conventional wisdom at the moment would have it at that the euro is a sell on the basis that interest rates are trending down. Away from that conundrum and onto another one, which is gold. Gold, obviously, here we had the sort of the vicious April collapse. It was reported that I think $20 billion of sell contracts were in place here to push this market down, and then after the market had come down, we were sort of told that there was a lot of physical buying interest from central banks and private individuals as well, and that this was going to take gold back up again. It worked a little bit, but really the market failed well below 1500 and well below previous 1550 zone support. So the overall picture here is a negative one. But there are one or two points to note in terms of where the market might actually go over the next month. I think that really it's actually starting to look less negative than it was even a few days ago. What we have here, what it seems to be, is that we've got a falling wedge formation, which is actually a bullish formation despite the name, and with these two converging trend lines, the likelihood is that before even the first half of June is out, we'll see a break to the upside, a break through $1,400, say 1420 is the entry point as a sort of stop yourself into the position, and we could see a turnaround here back towards 1500. I wouldn't want to call it higher than that at this stage. Um, Obviously, you're going to wait for that trigger 1400, 1420 before going in, because obviously there's always a chance of more consolidation towards 1350. But at the moment, I'd be backing, just narrowly backing a near-term intermediate rebound for this market, and sort of a counter trend, let's say counter 2013 trend anyway, trend move to the upside. So um, narrowly on the upside on gold, and as I said before, let's say narrowly on the upside for the euro over the next month.